Hey everyone, have you ever felt like investing was this big mystery only for financial gurus? Well, today we're diving into a strategy that can make investing simple, effective, and less intimidating: index funds. Instead of trying to pick the next big stock and time the market perfectly, what if you could just match the market's performance? That's the beauty of index funds. We're going to break down exactly how they work, dive into the massive benefits, and show you how to get started so you can start growing your money smarter, not harder. So, stick around because by the end of this video, you'll see why index funds are a game changer for both new and seasoned investors alike. Ready to unlock the power of index funds? Let's get started. So, what exactly is an index fund? Imagine a big basket of stocks or bonds. Instead of buying each one individually, you buy into the whole basket with one purchase. This basket is designed to track a specific market index like the S&P 500, which is made up of 500 of the biggest US companies. When you invest in an S&P 500 index fund, you're essentially buying a tiny piece of all those companies. It's like owning a little slice of the entire stock market. And because index funds follow the market, you get the average return of all those companies, which historically has been pretty great. Other popular index funds include ones that track the NASDAQ 100, focused on tech companies, or even international indexes, giving you global exposure. This diversification is key because it spreads your risk across hundreds or even thousands of different investments. Remember, index funds are all about simplicity and making investing accessible to everyone. They are also great for long-term growth, thanks to the power of compound interest. Plus, they often come with lower fees compared to actively managed funds, making them a cost-effective choice for many investors. So, if you're looking for a straightforward, diversified, and low-cost way to invest, index funds might just be the perfect fit for you. Now, let's talk about why index funds are such a powerful tool in your financial journey. First off, they're incredibly cost-effective. Since you're not paying for someone to actively pick and choose stocks, you avoid those high management fees that eat into your returns. This alone can save you thousands of dollars over time. Second, index funds offer instant diversification. Instead of putting all your eggs in one basket with a single stock, you're spreading your risk across hundreds or even thousands of companies, which can lead to more stable returns over the long run. Remember, investing is a marathon, not a sprint, and index funds are designed for long-term growth, allowing you to ride out the ups and downs of the market. Over time, this can lead to financial freedom and peace of mind. So, consider index funds as a cornerstone of your investment strategy. Let's demystify the process of how index funds actually work. When you invest in an index fund, you're essentially buying shares of that fund. The fund manager then uses that money to buy the same stocks or bonds that the index tracks in the same proportions. This means your investment is spread across a wide range of assets, reducing risk. So, if the S&P 500 index has 10% of its value in Apple stock, the corresponding S&P 500 index fund will also hold approximately 10% of its assets in Apple. This mirroring ensures that your investment performance closely follows the index. Now, as companies grow or shrink in value, the index will adjust accordingly, right? Well, index funds have a built-in mechanism called rebalancing, where the fund manager buys or sells assets to ensure the fund's holdings continue to mirror the underlying index. This process happens periodically to maintain the correct proportions. This keeps everything aligned and ensures you're always invested in the same proportion as the index itself. By doing so, index funds offer a hands-off approach to investing, making it easier for you to stay on track with your financial goals. You might be wondering, what about those actively managed funds where experts are picking stocks? It sounds great in theory, but here's the thing. Consistently beating the market is incredibly difficult, even for professionals. In fact, studies have shown that the vast majority of actively managed funds actually underperform their benchmark indexes over the long term. Think about it. Those fund managers have huge salaries to pay, research expenses, and trading costs. All those fees cut into your returns. With index funds, you're opting for a more passive approach, essentially matching the market's performance at a fraction of the cost. Remember, it's not about trying to outsmart the market. It's about harnessing the power of long-term growth and compounding returns. By choosing passive investing, you can focus on other important aspects of your life, knowing that your investments are working for you over the long haul. Ready to dive into the world of index funds? Great! Getting started is easier than you might think. You can invest in index funds through most brokerage accounts, many of which offer a wide selection of index funds to choose from. When selecting an index fund, consider your investment goals, risk tolerance, and time horizon. You want to focus on US stocks, international stocks, or a mix of both. Each option has its own set of benefits and risks. Are you comfortable with a higher risk for potentially higher returns, or do you prefer a more conservative approach? Assessing your risk tolerance is crucial. Once you've chosen your index fund, it's just a matter of setting up an account and making your initial investment. The process is straightforward and user-friendly. You can even set up automatic contributions, so you can consistently invest over time without even thinking about it. This helps in maintaining a disciplined investment strategy. Remember, even small, consistent investments can add up to significant wealth over the long term. Patience and consistency are key to growing your investments. Over time, the power of compounding can significantly boost your returns, making index funds a smart choice for long-term investors. The real magic of index fund investing happens over the long term. By staying invested and letting your money compound year after year, you're giving yourself the best chance to build wealth and reach your financial goals. Remember, investing is a marathon, not a sprint, and it's essential to stay focused on your long-term goals, even when the market gets bumpy. It's also important to review and rebalance your portfolio periodically. As your investments grow, the allocation of your portfolio might shift, so it's a good idea to make sure it still aligns with your risk tolerance and investment goals. Don't get discouraged by short-term fluctuations. Stay the course and let the power of compounding work its magic. Over time, the ups and downs of the market will smooth out, and your consistent investment strategy will pay off. Remember, patience and discipline are key. Stick to your plan and don't let short-term noise distract you from your long-term vision. By staying the course, you harness the true potential of index funds. Keep your eyes on the prize and let your investments grow steadily over time. So there you have it. Index funds offer a powerful and accessible way to invest in the market and grow your wealth over time. By understanding the basics, advantages, and long-term benefits, you can make informed decisions about your financial future. Remember, you don't need to be a financial expert to invest successfully. With index funds, you can keep it simple, cost-effective, and aligned with your long-term goals. Start by doing your research. Choose index funds that fit your investment strategy and stay consistent with your contributions. Investing is one of the most important things you can do for your financial well-being, and index funds provide a solid foundation for achieving your goals. Stay patient, stay informed, and let your investments grow over time. With the right approach, index funds can be your path to smarter investing and a secure financial future. If you found this video helpful, don't forget to give it a thumbs up and subscribe to my channel for more personal finance tips and tricks. Hit that notification bell so you don't miss any future uploads. Your support means a lot and helps me create more valuable content for you. And as always, thanks for watching, and I'll see you in the next one. Stay tuned for more insights and tips on how to manage your finances better. Follow me on social media for more updates and behind-the-scenes content. Take care and happy investing.